Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data. So what the non-commercials and the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is approaching a quite strong level of previous monthly resistance from which all these rejections to the downside were created, which now that the market has broken into the upside with the close of last month is now turned support. So as the market is testing this previous resistance turn support, we could expect bullish price action to be created away from this level, pushing this market higher. We can also notice that if we look at the macro movement, so we see all this essentially movement here, we can identify a pattern, which is the pattern of having a clear impulse, a nice correction, and currently we're getting the continuation to the upside. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 Fibonacci retracements lining up exactly at this level that we could in fact expect this market to reject to the upside even further. Now, if we drop down on the weekly time frame, what do we see? Now, here on the weekly, we have a very similar situation that what we have already identified by looking at the monthly time frame. In fact, we can see how we have previous weekly resistance all across this zone, which is now turned support here. And we could expect a retest of this previous resistance turn support and then to see bullish continuation away from this level. Now, if we zoom in closer, we can also notice how we just had a clear impulse. Now we're getting the start of this correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a 0.618 and 0.786 Fibonacci retracements exactly inside of these levels that we could in fact expect this market to test that zone and then to reject it to the upside. Now, if we drop down on the daily time frame, what do we see? Now, from a daily standpoint, we can see how we just had the creation of this M pattern. We had the move to the upside, and in creating this correction, the market has created an M pattern. Now, as we said many times, after the creation of an M pattern, what we could expect is a move higher for the completion of the M pattern at the neckline, which is the previous support turn resistance. So here on the daily, we could expect a potential reversal higher for the completion of this M pattern at the neckline, which is this previous support here turn resistance. I also spoke about USDCAD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move higher. Then we had the creation of the move. And from here, I made another analysis explaining all the reasons for which we could expect first this correction. And then from here, more bullish continuation, which again is exactly what the market just gave us. And by the way, I will link in the description all these previous analysis so you can go and check them out for more free education. Now, at the moment, what do we have? Well, before we continue with our analysis here from a technical perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. Now, checking the data for the CAD, what we can see is that with the last reports, net positions have been decreasing quite massively. We went, in fact, from having a positive net positioning of plus 6.3k net positions all the way down to now having a negative net positioning of minus 48.6k net positions, meaning that institutions went from having more longs than shorts on the CAD to now having way more shorts than longs, so the completely opposite situation, with now 70.9k shorts compared to only 22.3k longs. Now, keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you're actually already checking CAD USD. So if you want informations on USDCAD, you have to reverse everything, which means that actually institutions have been moving to the bullish side of USDCAD. So they have been longing USDCAD by shorting CAD USD, therefore by decreasing their net positions on CAD USD. So as institutions are moving to the bullish side of USD CAD and longing it, since we have this M pattern on the daily time frame, and this is also previous daily resistance turn support, as we can see here, there is definitely the possibility inside of this area to see more institutional longing, which at that point would further increase the probabilities of a potential move higher. So how we could be approaching this potential reversal higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down here past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout here on the website. So I really suggest to go and check it out as soon as possible. The link is both in description and also in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.